So I think in the few weeks around launch, I think it's possible for a variety of scenarios to happen. I actually have low confidence exactly what will happen in the few weeks around launch. I think as we get to month two, three, four, five, and six, this flood of money that's going to come into the space is going to make itself felt. I think we could easily be at 5, 6 billion by the end of the year in net flows, and I think it could accelerate from there in 2025. But I just think investors should be prepared that the few weeks around launch will be an interesting period with lots of shifting dynamics. The long-term story is $15 billion is going to come into these ETFs and push us to new all-time highs.
Bitwise CIO Matt Hougan recently made extremely bullish predictions for US spot Ethereum exchange-traded funds and the underlying cryptocurrency. Matt suggests that the Ethereum exchange-traded products will attract around $15 billion in net flow in the first 18 months after they are finally approved by the US Securities and Exchange Commission and start trading. To arrive at these numbers, Matt compares the relative size of the Bitcoin and Ethereum market caps, estimating that investors will allocate to their respective ETPs roughly along the same lines. Matt points out that Bitcoin's market cap was about 74% of their combined market cap, while Ethereum had the remaining 26%. On that note, Matt adds, US investors have $56 billion invested in spot Bitcoin ETPs. I suspect this will reach $100 billion by the end of 2025 as these ETFs mature and are approved on platforms like Morgan Stanley. By this logic, spot Ethereum ETPs will need $35 billion in AUM to reach parity. However, Matt cautions that some headwinds might stop the Ethereum ETFs from achieving parity with the Bitcoin ETFs using these figures. Matt recently joined the Bankless team to discuss these predictions, as well as his outlook on the general state of the cryptocurrency market.
Because the reason I wrote my piece was I was frustrated, not by what Galaxy and Alex had done, which I thought was great, but a lot of the takes I saw on social media, which were just people sticking their finger in the air and saying, it's going to be zero, it's going to be $100 billion, it's ridiculous. There are starting points to look at. So I really focused on two sets of starting points. One is just the relative market cap of Bitcoin and ETH. I think it's incredible that people didn't look at that. And the reason I looked at it is I was speaking with an advisory firm that has, over $100 billion of assets. And the first thing they mentioned to me was that they were uncomfortable with just Bitcoin and they really wanted to diversify. They would be more comfortable with their advisors allocating if they could build a diversified basket. And it just hit me like a ton of bricks that the starting point for many investors is going to be the market cap weight, which is about a 3-to-1 ratio right now. Now, some people want Bitcoin only, some people want ETH only. There are good arguments on both sides, but the naive starting point is the market cap. So that was the first point. And then I thought to myself, well, there are ETH ETP markets internationally in Europe and Canada, among others, and they're not identical to the US market. Those ETP markets operate a little bit differently, but they're not completely irrelevant. So let's look abroad. And when I looked at the AUM, it almost lined up with this market cap weight. It was a little bit lower, which makes sense to me because Bitcoin was first and some people just click the box and move on. But they were 22 or 23% by assets. And from there, it's some pretty simple math. And you arrive, from my perspective, I mean, the number I got to was $15 billion over the next 18 months. But what you arrive at more fundamentally than that is that, yes, there's going to be significant demand for these ETPs. I could be off by billions of dollars here or there, but it's not going to be zero. It's not going to be 100 billion. It's going to be really significant, 10, 15, 20, in those ranges. I think at launch is the thing I'm the squirreliest about, because there's a big question in my mind how fast the money comes out of ETH and whether there is some significant net outflows that could even exceed inflows for a short period of time. I don't know that will happen. That didn't happen in Bitcoin, but I do think people have sort of realized that trade is inevitable and they're going to make that swap. And so maybe they accelerate the pace at which they make that swap. And there are two types of investors in there right? There are investors who want to be long ETH, and they will probably sell the higher cost product and rotate into products from Bitwise and Galaxy. And then there are people who are just playing the arbitrage trade, who have bought ETH because it's trading at a discount to its net asset value, hedged themselves, and are just waiting for that discount to disappear if there's a conversion, and then they'll exit the ETH space. So the thing to worry about is whether those people exit and do new investors come in fast enough. So I think in the few weeks around launch, I think it's possible for a variety of scenarios to happen. I actually have low confidence exactly what will happen in the few weeks around launch. I think as we get to month 2, 3, 4, 5, and 6, this flood of money that's going to come into the space is going to make itself felt. I think we could easily be at 5-6 billion by the end of the year in net flows, and I think it could accelerate from there in 2025. I would note that Bitcoin sold off after its launch for a few weeks, and then it rallied sharply to new all-time highs. Again, if I had to make a base case analysis, I don't expect that to happen. I expect there to be enough new investors come in to offset it. But I just think investors should be prepared that the few weeks around launch will be an interesting period with lots of shifting dynamics. The long-term story is $15 billion is going to come into these ETFs and push us to new all-time highs. And I think that will happen rapidly.
In a more recent post on Twitter, Matt notes that while there are some short-term headwinds, which are expected to have some negative effects on prices, there are even more tailwinds in the long term. The post reads, "We have multiple short-term, negative, and non-recurring headwinds. Mt. Gox, US government sales, etc. We have multiple long-term, massive, significant tailwinds. ETF flows, the DC shift, winning in courts, improving infra, and the Lindy effect. The short-term, non-recurring headwinds are depressing prices. This is a gift to long-term investors." With these expectations for Ethereum ETFs, Matt is predicting significant price gains for the underlying assets. He believes ETH will hit new all-time highs within months after the ETFs start trading. Here are more clips from the interview.
I think there are lessons you could take from Bitcoin. GSR put out a report on this recently. They talked about how the Bitcoin ETF effectively 2.5x'd Bitcoin's price on its first 15-ish billion of inflows. They considered it from when it was clear to the Bloomberg team that we were going to get a Bitcoin ETF, which was October, until today, right? And Bitcoin was around $27,000 when that happened. So they're counting all of that price appreciation, which I think is a reasonable estimate. Here we have a much shorter window because everyone was bearish on these ETFs until a few weeks ago. And so we're just sort of building that estimate in. Will we see the same impact? We're doing an analysis right now. So you're capturing us mid-analysis on the price sensitivity of ETH to these inflows. I think there's an argument to be made that it could be stronger. That argument is based on the fact that there is effectively no net new supply in ETH, and there is net new supply in Bitcoin right now. I always like to think of the market as two types of people who have to sell and people who can sell. In Bitcoin, the people who have to sell are the Bitcoin miners, and they've swallowed some of the demand that the Bitcoin ETFs have had. Here, net issuance roughly zero. It depends on your time frame, but roughly zero over recent periods. The only people that these ETFs can buy ETH from are people who don't have to sell. So there may be more reflexivity in the price. I'm pretty optimistic if we see these flows, we're moving to new all-time highs.
Solana ETF filing. I'm wondering what your guys' reactions were to that.
It's clever in a sense. There are two facts that are relevant here. And VanEck's a great firm. I'm friendly with the firm. We're investors in some of their products. Facts are relevant. There's never been a commodity ETF approved by the SEC without a parallel regulated futures market. So there's the spot Bitcoin ETF and the regulated Bitcoin futures market, potentially this ETH ETF and a regulated market. Gold product in the approval of that reference the gold futures market, and there's no regulated Solana ETF. So in a sense, it bucks ETF history. The other fact is that the SEC has 240 days to review these applications, and 240 days from VanEck's filing is sometime in mid-February. which is about when a new SEC commissioner would come in. And so I think
Mm.
that's sort of like the bull case and the bear case to that filing.